All right, so guys, we're going to go through the commercial presentation. And I'm just getting started. So we're going to talk a little bit about commercial multifamily investing. As we go through this presentation, I think I already made this disclaimer, but I'm not a lawyer, CPA, financial advisor, economist, or expert in the auto industry, even though I may have played one at different points during the meeting tonight. We do recommend that you guys get your contracts, taxes, business plans, etc. Seek the advice of one of those professionals. I can only share with you guys what has made me successful over the last 15 plus years that I've been investing in real estate. We also have a disclaimer about one of the companies that we started. We call it the Canis Major Incubator. This is a platform for both active and passive real estate investors in Texas. So this is what we love and what we do in our associations. We say this is Texans teaching Texans how to invest in Texas using strategies that work in Texas. We know that sometimes some people will come here from out of state and try to give you all of these different investing strategies that might work really well if you were investing in the state that they invest in, but may not work as well if you are investing in Texas. So this is local advice from local real estate investors. CMI Canis Major does not sponsor deals, and of course I can't make any guarantees on returns on or investment claims or anything like that. What Canis Major does do is we provide training for both passive investors and active investors who want to invest in commercial and multifamily real estate. Our group also funds a lot of deals for the investors, many of whom all of them are actually part of this association, and funding for those deals as well as those investment opportunities. One of the, and people always ask me, why do you present? Why do you have this real estate investor association? Of what benefit is it to you? And for some of you guys who were here earlier, I told you that this is where I got my start in this same investor association over 15 years ago. And it was this investor association that gave me the leg up that I needed to be successful as a real estate investor. And I have carried that torch. I carry that torch not just because it helped me become successful, but also because every time I give a presentation in front of a group of people, someone either comes up to me to say, hey, I've got a deal that I'd like to sell you. Wonderful, I just happen to be a buyer. Or, hey, I've got some money that I would like to lend you. Wonderful, I just happen to need money for the house that I'm about to buy that somebody else gave me. So that's one of the reasons why we do this. So there are a lot of investment opportunities just being associated with other investors, being part of this association as well. Canis Major, this company also vets those deals. So it's looked at by a board of directors, it's looked at by an attorney, and then we also have deal sponsors that are outside of Canis Major but are part of the investor association. For us, what we look for when we're investing in real estate is many people, when they start investing, and for us personally, when we started investing in real estate, we were investing in residential real estate. Over the years, we moved from residential to commercial, and today we invest in both asset classes. So for us, I always say that for Phil and I, we're not only strategy agnostic, but we're also asset class agnostic. If there's a way to make money on it, I don't care if it's single family or if it's multifamily, I'm going to find a way to make money off of it. And we've also divided it into the active investing as well as the passive investing. Obviously, when we first got started in real estate, we were very active in every single part of the real estate investor equation. Today, we obviously still are, but we also just write checks to invest, for example, in multifamily projects that we're not actually in there actively managing. But those are the different quadrants that we found that real estate investing falls into. On the residential side, when it comes to passive investing, buying and holding, Austin is a great market to buy and hold in. Just in the last 5 years alone, for example, you've seen on average many of the properties in the Austin area go up at least $100,000. Some of the better ones that are in better locations have actually gone up even more than that as well. Same for commercial investing. Buying and holding is a great way to passively invest. You just write a check and are part of a deal, hopefully one that's someone else has already vetted. And then on the active side, you can do the flipping, get that forced appreciation to be able to get that active cash flow and active investing. And you can also do that on the commercial side as well. If you're looking to replace your job, how many of you guys are looking to replace the income from their job? If you're, okay, yeah, okay. So if that is the case, then what I want you guys to be focused on is, and I know you guys are all here for the commercial presentation, but I want you guys to be focused on residential real estate investing. If you are investing in commercial, the likelihood of you being able to replace your income immediately is very low. It takes time when you are investing in commercial real estate. Now, is it a great investment to make? And the answer is 100% yes. But if you are looking to replace your income, then you need to have your eyes set on, at least in the immediate or in the short term, on residential real estate investing. It's a great way to generate active income with even just no money or even a little bit of money. But if you are looking to do something that's much longer term and don't have to or don't want to replace your income today, then I would suggest investing in the multifamily side. For passive income, again, residential buy and hold, great way to build wealth, starting with a little bit of income as well. On the passive investing commercial multifamily quadrant, this is a great way to make money from money that you already have. So for example, if you have money saved up in an old 401k or move it over to a self-directed IRA, it is a great way, it's a great investment to make. Oh, really, really, really.
Is it time for me to go, or should I stay
Is
for
Nana
longer?
here?
Yes, Nana.
Okay, then you can go with Nana. Okay, all right.
19 sales.
Good job, thank you. Thank you all. Tell all these kind people who joined membership with you, thank you. Oh, that's the best you can do.
Thank you, guys.
There you go, all right. So if you already have money, for example, in a self-directed IRA or in a 401k, and you're just looking to grow that wealth, okay, then you need to look at investing those in commercial multifamily deals and obviously holding that for the long term. For those of you who want to be active and want to be deal sponsors and want to maximize the whole thing, and this is a progression, but then you'll want to look at the active investing side, actually being a sponsor in some of these commercial multifamily deals. What we usually find is phase one, and this is how we did it. We wanted to, when we got out of corporate America, we had to find a way to replace our income immediately. Commercial real estate investing was not going to do that. Did we ultimately want to invest in commercial real estate? The answer is yes, of course, we all do. But if we want to replace that income right away, you need to look at residential investing. Phase two, as you want to grow your wealth, right, then you use some of these other strategies. And phase three, after you've replaced your income, started to build wealth, then we see a lot of investors move over to commercial multifamily side and also be active investors and also be deal sponsors as well. So we'll talk about all of these as we go through the presentation, the rest of the presentation today. So an overview of what that looks like, commercial multifamily investing. And some people will say, well, it's redundant to say multifamily after commercial. And the answer is yes, you are right, it is. But I think and the reason why we say that is because I think a lot of people see commercial as being more storage units, RV parks, mobile home parks, strip malls. And they just see it being separate, being apartment buildings being a little separate, so that's why we say that. But these are all of the different classes that you can invest in for commercial real estate, and there are different ways to make money with all of these different asset classes. Usually it boils down to how do the numbers look, and that's how every investment should look. It's a lot easier to not fall in love with an apartment building than it is to not fall in love with a house. I don't know why, but it is. But it is a little bit different in terms of commercial versus single-family investing. When you're investing in commercial, you're really investing in a business, okay? So is very different than just investing in an individual property. And the valuation is a little bit different as well. So when we're evaluating single-family property, we're just looking at what do the houses in that same neighborhood, in that same subdivision, of that same build type, of those same bedrooms, bathrooms, square footage, year built, etc. What are they selling for? But when you're investing in multifamily, you're not just looking at what all the other apartments are selling for. You're also looking what are the incomes that are associated with that particular property. And mainly you're looking at those net operating incomes, the net operating income from that property. So you could have two properties that are very similar in the exact same area, same build, everything, but one will be valued at a lesser rate if their rents are not as high as the other property. Obviously in commercial, these are bigger deals. They take more money. They're a little bit more complex. So you'll find yourself, and it's so funny. Like I had another investor who's just starting to invest in commercial and multifamily property, and it was the cutest email I've gotten in a long time. She said, "Shanoa, will you take a look at this investment for me and tell me whether or not I should make this investment? And how long is a typical PPM, a private placement memorandum?" Well, this one happened to be 165 pages. So would you mind just go read through this and let me know if I should do this deal, right? So it is a lot more complex, for example, than just looking at a single family house. So do be aware of that. And also be aware that these investments, especially if people are pooling money, are regulated by the Securities and Exchange Commission. And these deals have to be very compliant to make sure that no one goes to jail. So that's what you'll want to look at when you're looking at deals. You will need special power teams. You just can't say, oh, I know someone who invested in commercial, or I'm just going to throw this PPM over to them and say, hey, would you mind taking a look at this and telling me whether or not I should do this deal? You have to have people in place in order to do the due diligence. And also you have to have people in place in order to help you with the funding. Most people have enough money, not most people, but many people have enough money to buy a house and to buy it and fix it and flip it. And the average house price in Austin, city of Austin's like over $450,000. But the average multifamily apartment complex is somewhere between 4.5 million and maybe 10 million. The average person, and very few people have enough money to do it themselves, and that's why they pull their money together to put the funding in place, even if they're just putting the funding in place for the down payment and they're bringing a bank in to fund the rest of the acquisition. Strategies are very similar to single-family investing, and I would actually kind of change this around from the way that I wrote it. I would say that a lot of the single-family strategies that we use today, we actually adopted from many of the commercial strategies that people use, specifically the wraparound mortgages, owner financing, equity partnering, even the lease options came from commercial-type investment strategies that we use also in our single-family strategies. But obviously with commercial, you can fix it and then flip it. Usually if you're fixing and flipping in single family, you're holding for probably on average about 6 months. But usually if you're fixing and flipping in multifamily, how long are you holding? Usually you're holding for about 5 years unless there's some disruption that happens in the marketplace. So some of my colleagues who are real estate investors who did some investing in commercial in 2004, 5, and 6, and they thought, oh, we're going to be in and out of this deal in three years, and then the big market correction happened, and then 10 years later, they're just now getting out of those deals. So you do have to be patient as you go through different market cycles and make sure that the financing that you have in place will allow you to get through any market cycle that might come about. So let's talk a little bit about determining value when it comes to commercial property. So value when it comes to commercial property is a function of net operating income divided by the cap rate. So I'll go through the definition of all these different things. Net operating income is all of the income, so your rents, your fees, Could be fees for the washer and dryer, fees for the parking garages, fees for just all the pet deposits and all the little dinky fees, minus whatever your operational expenses are. Now, the big mistake that new investors usually make when they're evaluating or including expenses is they want to include the financing. They want to include the monthly payment. And the truth is, when you're evaluating it using this model, you do not include the financing because everyone's going to finance it a little bit differently. The cap rate is your capitalization rate or your return on capital for like properties in the area. And I think at the end of the presentation, if I have some time, I'm going to go through what that looks like as well. So how do you come up with a value? So let's use an example where you have a 50-unit complex and each one of the 50 units is generating $1,000 a month. You multiply that times the 12 months a year, that's $600,000. And let's say you have $300,000 in expenses. That means your net operating income is $300,000. And then let's say the capitalization rate or the cap rate of other properties, like properties in that same area, is 10%. And I'll show you where you can get those numbers as well as we get to the end of the presentation. Then if you take that 10% and or you take that 300,000, divide it by the 10%, then the value of that property based on the cap rates for that area should be about $3 million. Now, what's cool about multifamily that you don't see the same value change in single family is if you have even a small increase in your net operating income, even a small increase in your monthly rents. Let's say your monthly rents go from $1,000 a month to $1,100 a month. And that means your net income $660,000 a year versus $600,000 a year. And let's say you're able to bring down your expenses about 12 to 15% to $260,000. Then your numbers can change substantially. So your net operating income is $400,000 a year. Take that $400,000 divided by that 10% cap rate, and the value of your property all of a sudden goes up to $4 million. So this is where small changes can have big results, especially when it comes to multifamily. You can't get these same changes if you have a single family rental property, even if the value does go up 10% in terms of your monthly rents, even if you're able to pull down your monthly expenses, your operating expenses, they're still, because it's single family, going to look at what the comps in the rest of the area are selling for, and that's how they come up with value. So it's very different when it comes to commercial. Your cap rate is defined or determined by the value and the net operating income. So if you don't know the value, the cap rate can also be determined by looking at the comparable properties in the area. So for example, if similar class or price apartment units in the area have a cap rate of 8%, your subject property will also have a cap rate of 8%. Then there are different cap rates based on the class of property. So you have Class A, Class B, Class C, and there are different class rates also associated with whether or not that property is stabilized. So the stabilized properties have better cap rates than the unstabilized properties, the ones that are going through transition, if you will. Commercial, obviously, bigger deals. The money is bigger because, and it's not just usually an individual because it's raised through a syndication. You're pulling from multiple investors and regulated by the SEC, so you have to be completely compliant. Otherwise, somebody's going to get sued and it's not going to be pretty. You also have to have a bigger and different power team for multifamily investing than you have to have for single family investing. SEC attorney, commercial brokers, commercial contractors, commercial property managers, asset managers, inspectors, bookkeepers, etc., to do the due diligence. You can't just have one inspector come through a 100-unit apartment complex, and usually they'll only give you 1 day to walk through that apartment complex to do your due diligence. You have to have multiple teams of inspectors going through there to evaluate the condition of that property. There are a lot of ways to play as a commercial real estate investor. So there's the passive route. So this is making money with money that you've already saved up. It's high returns. It's no work other than stroking a check. So it's pretty easy, but you've got to have the money there to be able to do that. There are taxable and non-taxable income components. It is an awesome retirement plan. Now, if you want to go active for multifamily, this is making money with other people's money. And as you saw from the list of vendors that I had, and even Quest coming up here, there is a lot of money that is on the sidelines looking to invest in real estate. So this is a great way to make money with other people's money. Quest has about $1.8 billion under management. Many of the hard money lenders have hundreds of millions of dollars to lend as well. Now, when you are active, you are the person who's actually working the deal. You are the person who's putting it all together. You're the person that's putting the new team in place. You're the person who's managing the remodel. You're the person who's managing all of the lease agreements, or you're putting a team in place to be able to do that for you. It's a great new career, but again, do not expect to start this today and replace your income in the next 3 to 6 months. That will take a fair amount of time. Again, if you want to replace your income, residential is the play for you to be able to make to be able to get there. Some different benefits for commercial investing. You don't have to be active. Obviously, if you're playing a passive role, you're just writing a check. You don't have to be active in the management responsibilities. There's no liability beyond the initial investment versus if you're investing in a single family house and something happens to the tenant there. Guess what? Either you personally and or your LLC, as an example, would have some additional liability. As a commercial investor, a passive investor, you don't have that additional liability. No involvement in operations, but you get the regular cash distribution, so you get that mailbox money. Lots of exit strategies for you as a real estate investor, from the taxable income that comes in to the tax-free income that comes in. So if you're using money out of your self-directed IRA to invest in one of these assets, the money goes back to your self-directed IRA until you're able to take it out from retirement. You can tax defer. So the government has created, I think they call it Section 1031, so they call it a 1031 exchange, and you can basically sell one asset and invest it in another. There are some rules to make sure that you do it properly, but at that point you can defer or basically kick the tax can down the road a little bit further until you go and sell that last asset. The benefit to you as a real estate investor, if you're doing a 1031 exchange, is instead of reducing your capital by the amount that you would have to pay on taxes from the sale of the original property and now not being able to invest as much in a future property, now you're able to keep all of that money through a 1031 exchange intermediary to invest in the next property. So it's a really cool thing for us to use as real estate investors. Let's see, typical 5-year returns, the stock market versus commercial real estate. So in the stock market, if you're investing, you're usually getting no income during that time that you're investing. But when you go and cash it out, for example, your $100,000 is returned as your original capital investment, so that comes out tax-free. And then let's say in this case, using the average stock market return over 5 years, that $43,000 comes back to you in terms of long-term gain. So you're paying the long-term capital gains tax as opposed to the income tax. If you're invested in commercial real estate, for example, let's say you make a $100,000 investment, well, you're getting money back every year as scheduled returns. Now, so you're getting these initial scheduled returns over the first 4 years as an example. Then when there's a liquidation event or a refinance event, you'll get the rest of the $60,000 also returned as tax-free capital. But the doubling of your money, so it's very typical for a commercial investment to double their money over 5 years, comes back as long-term capital gains. Again, can be tax-free if you've invested in your IRA, tax-deferred if you invested in another property as well. For active investment benefits, so it's when you are an active commercial investor, this is where billionaires are made, okay? But also remember, it does take some time to get there. Various exit strategies as a deal sponsor, as running some of these projects, you do get that taxable income. Again, the same tax-free income, tax-deferred income, and the infinite returns, getting that capital back, but also keeping that real estate investor. So a great thing to do for the active investors as well. So who are candidates for investing in commercial real estate? People with self-directed IRAs who want to get out of the stock market because they feel that that is a little scary at times, and that, you know, the thing about the stock market versus the real estate market, you'll see the stock market go down 5% in a day. You don't see the real estate market, and specifically the real estate market in Austin, Texas, go down 5% in a day. That's just not how that works. That's just not how that operates. So that's one of the great benefits of moving your self-directed IRA money out of the stock market, for example, and into real estate. And again, it's great for people who have money to invest from their primary business or job. For Phil and I, we used a lot of the money that we saved up investing in single-family real estate, and a lot of the appreciation that we had in single-family real estate to invest in our commercial multifamily assets as well. Obviously, people that are looking for that alternative to the stock market, people looking for regular cash flow and a significant payout at the end of those investments as well. And there are opportunities for both accredited investors and sophisticated investors. Accredited investors, there are very specific financial guidelines for you to hit those targets. You have to, as a single individual, have to have at least $200,000 worth of income or $300,000 with a spouse, with the expectation of that continuing over the course of the next several years. And you have to have a net worth that is greater than $1 million, and this excludes your primary residence. So the reason why they excluded the primary residence is, I think at one point, basically 1,000 square foot house in California was $1 million property. And that made that person at that time an accredited investor when really they should not have been an accredited investor. There's also the ability to become a sophisticated investor. And that's one of the things that we help you guys do as part of the Real Estate Investor Association and as part of Canis Major. That means that you have training. That means that maybe you've invested in other asset classes and are knowledgeable and have that level of understanding, and also understand that not only could you make a lot of money doing this, you could also lose a lot of money doing this. But usually the rewards are in line with the risk. So how do you find money to invest in commercial real estate? Those existing IRA accounts are great things to transfer in. For us, many of the investments that we have in our commercial multifamily investments are from an old 401k turned self-directed IRA that we use to own shares in many of our multifamily investments. Home equity line of credit, savings, CDs, checking accounts. Pardon me, you heard Lindsay come up here talk about the different options that she has for both lines of credit, both secured and unsecured. So great way to unlock that, to use that to invest in appreciating assets, savings, CDs, checking accounts, antiques or expensive belongings, previous investors' 401ks, those that when you left the company, I don't know what I'm going to do with it, and you just let it sit there. Those can easily be moved over as well. And of course, bringing friends and family into commercial and multifamily investing as well, especially those who are out of the stock market and you're like, they have all this money that they're sitting on the sidelines, they're getting 1 or 2% returns a year. Well, inflation is almost 1 or 2% a year. And especially they predict, as the market changes, they predict that inflation will become even higher. And if that's the case, then that $100,000 that they have sitting there is really depreciating every single month and instead of appreciating. So a great way to bring them along as well. Typical returns, typical investments. A typical investment in commercial multifamily, about $50,000 or multiples of that. So $50,000, $100,000, $150,000. Investors are buying shares, right? The Class A, Class B shares as an example of a deal, along with other investors. And the typical sponsored deals are structured to return 100% over 5 years. So double your money within 5 years, which is a great way to be able to build up that retirement. How do most people get into it? What we've found, and even for us as we started investing in commercial and multifamily, we found that there wasn't really a great place to go to get information about it, and information that we felt confident about, and information and investment opportunities where someone that we could trust who had experience was able to show us the analysis and due diligence. It does require large capital investments, and obviously there is a lot of risk there as well. And there's not great education about it. There's plenty of education about investing in single family, but just not as much when it comes to investing in multifamily, and these are in some cases can be much larger investments. Pooling money can be very complex and obviously regulated by the SEC, so it also has to be compliant when it comes to that. And that's a big reason why we see a lot of people, I'm interested in it, but I just don't know enough to actually be able to pull the trigger in it. So what we have done is we've created something called the Canis Major Incubator. So this is a platform to become sophisticated if you're not already sophisticated, and if you're also not accredited. So it's the premier platform for Texas commercial multifamily investors who are looking to learn and who are looking to invest. So what do we do to help you guys be investors and join and become part of this? We provide the training, we provide the investments. So again, one of the reasons why I stand up here to do a presentation every single month, twice a month, is because every time I do that, someone either brings me a deal or someone brings me money. So that way we're able, within even just the group, to be able to find those opportunities and to be able to fund those deals as well. And of course, the support within the network of other people who have the experience, who've been investing for a long time. Texans who have done it, investing in Texas, is a great way to be able to take advantage of that. And through the Canis Major Incubator and all the people that are invested as part of it, over $100 million worth of deals have been funded as part of this group. So it's a great group if you're looking to take action and be part of that. We also have a very experienced board of directors. Alan Doss has been investing for over 40 years. Roland Wiederanders is one of the top security attorneys in the state of Texas, so very familiar with securities law and keeping everyone safe and completing and doing that due diligence. For us, what we've found is, as much as we would love to invest everything that we can in Austin, with commercial, it's a little different. You go where the opportunity is. And many of the opportunities and many of the cap rates and purchase price are very similar throughout Texas. So for us, we invest in Austin, Houston, Dallas, and San Antonio. Every single one of those populations is growing. Every single one of those populations has lots of different investment opportunities. And we know the rules in Texas, we know the laws in Texas, we have the power team in Texas, and we have the banks and the other colleagues to be able to help us fund those deals here in Texas. Members of the Canis Major Incubator have an opportunity to see the deals, meet the sponsors, and not just in passing, but actually be able to spend some time with them to get to know them, network with the other members, and learn how things work in Texas. What's unique about us is this. We use multiple strategies. So we have the value plays, the cash flow plays, and then we've created variations of each one of those plays as well. We use multiple property types. So a lot of people who invest in commercial only want to look at one asset type within commercial. For us, if there's a way to make money, guess what? We're going to figure it out. We are asset class agnostic, but we are very interested in finding ways to be able to make money and create different opportunities, not just for ourselves, but also for the other members of the association. And having multiple strategies give our members even more investment options as well. So it's a very unique place to be able to invest in different properties. And then we buy properties very similar when it comes to commercial multifamily, very similar to the way that we buy single family properties. We're not going to pay full retail for anything. Everything that we buy is going to have some type of a discount. And that's one of the things that differentiates us from some of the other people that we see out there who are motivated buyers. For us, we're not a motivated buyer. We're waiting for the right deal. And the reason why we have this philosophy is this: if there has to be some type of an emergency liquidation event, no one wants to bring money to the closing table to be able to sell something. If you buy it right, as real estate investors, we make money on the buy. If we manage the project correctly, then we get our money back on the sell plus a good amount of profit. So that's one of the things that differentiates us from other people that are buying retail. Buying retail only works if the market's going up. If you buy at a discount every time, you're going to do well whether the market's going up or staying flat or even going down. Some of the things that are different about us, again, we have a statewide network. So we have investor associations in Austin, Houston, Dallas, and San Antonio. All of this network is bringing in both deals and money to be able to invest in these different commercial and multifamily deals here in Texas. Why is Canis Major investing in multifamily through Canis Major different or better than crowdfunding? With crowdfunding, many of these deals are remote deals, so you don't even have the opportunity to see these deals. They're in different states. Remote sponsors that you don't have the opportunity to meet. Remote members, you don't have to have an opportunity to make a relationship and bring in your own deal flow when you're doing crowdfunding, and no additional training and support. With Canis Major, we've got the local deals, the local sponsors, the local members that you get to meet and network with, as well as the local training and support. We live here, we work here, we understanding investing here as well. So if you're interested in passively or actively investing in commercial real estate, if you have a self-directed IRA, if you've already been investing and you want to start moving it into commercial, if you'd like to join a large network of other real estate investors who also are investing here in Texas, if you want access to the commercial multifamily investing opportunities that are available as part of the network, if you're looking for training, if you're looking for support, if you're looking for guidance on some of these different investing activities and opportunities, then this is the right place. We train to make sure that you have that level of sophistication, to make sure that you understand it, and open up the world to what it looks like to either actively or passively invest in commercial real estate. So what we've done to help to facilitate this and help you guys be stronger real estate investors and become sophisticated real estate investors is we've put together a series of workshops in the places that we invest. So in Dallas and Austin and in Houston. So we've got several of these different workshops coming up. They're 3-day workshops where we share tribal knowledge, where we give you access to other successful investors who are actively doing what you are trying to do, access to those local deals. And ultimately, it's something that will change the financial trajectory of not just you personally, but that of all of the people that you touch and you bless as a real estate investor. So it's an opportunity to get that stress-free abundance. So we do a live training workshop. Again, this is Texans teaching Texans how to invest in Texas using strategies that work in Texas and properties that are in Texas. We'll teach you guys how to become a sophisticated real estate investor, and we'll really do a deep dive of how to evaluate these properties and what that looks like. It's really an experiential learning too, because we do a bus tour, so we take you by some of the properties that we are personally invested in, so you can look at them, you can talk to the different sponsors, you can ask them what was the marketing that they did to do it, how they evaluated it, how they got their funding in, any of the best practices or the lessons learned from it. So you get to learn from those local people. We actually even bring them in to do the presentations as well. So you'll learn how to invest passively, and you'll also learn about opportunities to invest actively and actually become a deal sponsor yourself. Again, the next one that we've got coming up in Austin is October 12th. I got a little typo here. I think it's October 11th, 12th, and 13th. And obviously, for us, the more members that we have as part of the network, the more opportunities that we have for not just ourselves, but also for the other members of the group as well, which means more deals too. So again, live training workshop. This is the real deal. You'll get to learn even from the things that we've done. And again, be part and see the different properties that we're invested in. And it's a smaller group. So it's a group probably about the size of the number of people in this room. So imagine spending 3 days getting to know other people who are also investing in real estate, doing it either actively or passively. It's not a huge room where you can't actually make those personal and one-on-one connections. We do a luxury property bus tour. We do lunches. You get to ask questions of folks that are on our personal power team. We got a little cocktail party as well to be able to facilitate networking. What we found is nothing facilitates networking, the exchange of deals and the exchange of money like booze and food. And once we figured that out, then we opened up the bar because we want that to continue to happen as well, because that's when people start to open up and that's when the deals start to get exchanged. We'd love for you guys to attend our next meeting, and we've got a couple of options for you guys to do that. And that's this. What we will do is we will allow you guys to come to the commercial multifamily workshop for free as long as you are a member of this Real Estate Investor Association. And as Phil described earlier, the membership into the Investor Association is only $100 for an individual membership and $150 for a partnership membership. We also have our residential training. So we have a 3-day residential training, and then we have a 3-day commercial training. What we would like to see, especially for those of you guys who have not yet done your first real estate transaction, the smartest route to get educated, the smartest route to success, and the smartest route to be able to replace your income is to attend the residential workshop that we've got scheduled this month in September 27th, 28th, and 29th. After you get that basic level of knowledge, your second step should be to go to the commercial training that we've got on October 11th, 12th, and 13th. So I want to get you guys registered for both of those, but we want to make sure that you do it in that process to make sure you get the foundational skills that will be very important for you guys to be able to grow up into that commercial level. So what I'll ask is this. How many of you guys would like to get registered for this training? Really? How many of you guys would like to get registered for this training? Okay. So if you've already paid for your real estate association membership, what I'll ask is if you want to get registered for the commercial training as well, if you've already paid for the commercial or for the residential training, you have a blueprint for an example, raise your hand. We're going to give you guys the way to get registered for that right now. So Brittany's going to pass it out. Do we have anybody else to help pass out? So this is for if you've already been registered for the commercial. Now, hold on. If you have not yet registered for the Real Estate Investor Association and you want to pay to join the Real Estate Investor Association now, we will hand out a little card, and we're actually going to get you guys signed up for membership right now in this room. So if you have not signed up for membership already and you would like to get signed up for the commercial class, please raise your hand now. Going. Okay, we got one person here and then one person in the back. So for just $100, we can get you guys signed up for that membership to attend both of those classes that we've got here for you. And then we'll go ahead and get you registered right now. So what I will ask is if you have not yet paid for membership, we'll get you signed up right now with the iPad. We got somebody in the back of the room. Yes, I'm so sorry. And then I think we've got maybe one other person who has not yet gotten signed up. So, so if you have questions, we'll take them here in the room. But again, I want to make sure you guys get signed up. So if you'll please fill out those forms right now, because we're going to grab them up in just the next moment. So please fill out those forms now, because we want to make sure we get you in the right classes. We've got classes in Austin, Dallas, and Houston. So we want to know which ones you guys can go to make sure we get you registered at the right spot. After you fill out your form, just hold your form up, and then we'll go ahead and get you to hand them to one of our staff. So Brittany will pick them up, or Kaylee will pick them up, and then we'll make sure we get you registered for the right event. And while we're waiting on you guys to get signed in, Again, the next Investor Association meeting we have for residential training is September 27th, 28th, and 29th. So I want to get you there first and then get you set up for the October commercial training after that. And then guys, as you're filling out your forms, I'm going to go ahead and go over some of the cap rates that we're seeing for Austin, Dallas, and Houston for multifamily, just to give you an idea of what that looks like as they're picking up all the forms and processing the memberships. So right now for Austin, Class A for stabilized properties, and even expected to be stabilized properties, you're looking at a cap rate right now of somewhere between 4 and 4.5%. 10 years ago, 15 years ago, this number used to be somewhere between 8 to 12%. So cap rates have dramatically dropped, and really dramatically dropped just in the last 5 to 10 years. So what that means for you guys as real estate investors is you're paying more today for that future series of cash flows. And there's an interesting demographic shift that's happened that's allowed this to float and change as well. And that is the millennials that are moving into the market. They are not all buying houses. What are they doing? They're renting, and they're going more into multifamily than what we've seen in the past. Class B cap rates 4.25 to 4.75%. And then for those of you guys who are invested in Class C, which is a lot of what we buy, and then we move it up a class as we do all of the renovations, raise rents, lower the expenses every month, etc. Those are going at 4.5 to 5.25%. So those are what those look like as well. Guys, I think we have everyone's form. Is we missing anyone's form? Any twos that did not yet get signed up for membership? Any twos that did not yet get signed up for membership? All right, guys. So that is all we have for you today. So I hope this was beneficial and helped you guys learn a little bit more. And we appreciate you guys coming, and we're happy to be of service to you guys as members of the association. We'll see you at either our next Real Estate Investor Association meeting, or we'll see you at our 3-day training that's coming up. Thank you guys so much for joining us.